Good morning. Welcome to the Forex Pro Charts weekly trade results for the week of March 20th that ended March 24th, 2011. We had quite a few trades this week. Let's go ahead and take a look. First, we're looking at the Euro-JPY pair, and we're taking a look at the hourly chart. And the Euro-JPY pair hit the 60-minute armpit late the previous week, so not the week beginning February 20th, but the week beginning February 13th. Late in that week, price moved up rapidly and hit the 60-minute armpit. It did bounce for the 20 pips. In fact, it bounced for about 60 pips initially, came back up, bounced again about 100 pips, then came back up to the 5-minute armpit, bounced, returned to the 5-minute armpit, and returned to the 5-minute armpit then again this week, depending on what you did with your trades here late last week, or if some of our more aggressive traders decided to trade this armpit again, then we saw price move down and potential gains of 100 pips or more, again depending on exactly where you traded, either from the daily armpit or the 5-minute armpit, and what you did with your stops. The EJ, we had seen that price move late the previous week, so we went ahead and took a look at it this week, but probably would not be included in our totals for the week, but we did want to take a look at it again because the movement was late the prior week. So let's take a look at the pairs for this week. Okay, this is the Euro GBP, and we see that the Euro GBP moved strongly up during the week, came to and actually passed the 60-minute armpit, moved straight up to the 5-minute armpit and bounced down. Didn't achieve initially the 20 pip gain that we're looking for off the 60-minute armpit, went back up to the 5-minute armpit and then came back down and did achieve the 20 pip gain, and actually just a little bit more than that. Messed around with that and then closed out the week just still kind of undecided about where price was going. So if you traded the 60-minute armpit, you would have gotten your 20 pip gain, and then depending on what you did with your stop, you could be out of this trade at this point if you had moved your stop to fairly close to break even. If you traded the 5-minute armpit, you saw a gain. And you may or may not be out of this trade completely, depending again on what you do with your stops. This 5-minute armpit would have been a very attractive trade because the risk was very small, and we have many traders who trade both the 60-minute and the 5-minute armpit. So if you do that, you may still have a portion of this trade open, and we'll see what happens with this pair this week. But again, you would have gotten at least your 20 pips here off the bounce off of the 60-minute armpit. This is the New Zealand USD. Here again, another pair where we just saw a slight bounce. We saw price move up to the daily, the 60-minute, and the 5-minute armpit, moved up through the 60-minute to the 5-minute, and then bounced off the 5-minute back down below the daily, just barely achieving the 20 pips before it moved back up, came back down again, and then moved back up and moved through the zone. So again, if you traded off the 20-minute armpit on this pair as well, you would have at least achieved your 20 pip gain, and will be stopped out at this point no matter what you did with your trade. You should all have been stopped out here. So far that's 2 trades for the week with at least a 20 pip gain for 40 pips. Okay, this chart is the Euro USD, and we see that price came up very nicely here, hit our 60-minute armpit, moved back down, came back to the 60-minute armpit just barely, and we would have recommended that you have your cushion just above this trend line, and then moved back down. So if you were just able to capture this portion, you had about a 40 pip gain, a minimum. However, if you had cushioned or left one portion of your trade with somewhat of a cushion, then you would have seen about 180 pips here before price retraced significantly and then moved back down. Some of you, again, may still have a portion of this trade open. If you leave your final lot with just at a strict break even, then you may well have a portion of this trade open. You should have been able to capture at least 20 pips initially, maybe some additional pips, and if you still have a portion of the trade open, then you may be looking at some additional gains during this week. But this was a very nice trade. Again, 40 pips right here. What, you know, if even if you brought your stop immediately to break even and stopped out here, you would have had your 20 pips. And if you left a little bit of a cushion and kind of wait, like we've talked about numerous times, then price moved down very, very nicely from here for a 180 pip gain, bouncing off of this trend wall. So that would have been a very nice trade this week on the Euro USD. Then we have one more pair to look at. Here we are looking at the Great British Pound US dollar, the GBP USD. We see where price came up right at, you can barely see the 60-minute armpit because it's covered by the trend walls. But you see here that right here is the 60-minute armpit. Price moved right up to the 60-minute armpit and hung out there for a little while, then moved all the way down here. This was a 400 pip gain if you, depending on how you managed your trade, but since price didn't really have any significant retracements, many of you will have had at least one portion carry all the way down. Some of you may have captured your first portion, the initial 20 pips. Then some of you may have had a stop, may have stopped a portion of your trade out either here at the daily armpit. Many of you keep a, have a limit set for one portion of your trade right at the daily armpit. Then many of you, when price came down here and moved around, will have protected some profits right here at the weekly armpit, but then price did continue to move down. So most of you should have been able to capture pips on all three portions of your trade and gotten a significant portion of this 400 pip move on the GU. This is a textbook example of how we like to see price move. It moved down very, very nicely, very little retracement, and an opportunity to gain pips on all three portions of your trade. Sorry about that. So all in all, we had four pair with very nice gains total for the week of close to 600 pips potential. So you should have, and most of our traders should have been able to capture at least 100 pips total, even if they just had the first portion of their trades produce for them and then close them out. For more information or to subscribe to our full analysis and charting services, please go to www.forexprocharts.com. Thanks very much. We'll see you next week.